Wall Street, a realm of towering skyscrapers and frenetic energy. Fortunes are made and lost in the blink of an eye. Amidst this whirlwind of wealth and risk, one name commands respect and scrutiny in equal measure: Ken Griffin. Griffin's story is not just about financial success, it's a parable of our times. It's about the power of mathematics, the allure of risk, and the complex interplay of money, technology, and politics. From humble beginnings, Griffin built an empire. Citadel, his brainchild, stands as a monument to his ambition. It's a hedge fund unlike any other, a trading behemoth that has reshaped the very fabric of the financial markets. But Griffin's story is not without its shadows. His rise to prominence has been shadowed by controversy. Critics question his methods, his influence, and the very system he embodies. Love him or loathe him, there's no denying Ken Griffin's impact. He is a true titan of our time. Griffin's journey began at Harvard, where he started trading from his dorm room. His early success caught the attention of hedge fund managers, leading to the founding of Citadel in 1990. From a small office, Citadel grew into a global powerhouse, thanks to Griffin's innovative strategies and relentless drive. Over the years, Griffin has received numerous accolades, cementing his status as a financial visionary. Beyond finance, Griffin is also known for his philanthropy and mentorship, shaping the next generation of financial leaders. Ken Griffin's journey began far from the canyons of Wall Street in the sun-drenched suburbs of Florida. Born in 1968, young Ken displayed an early aptitude for mathematics. Numbers were his playground, their patterns a source of endless fascination. This innate talent wasn't confined to textbooks and classrooms. As a teenager, Griffin saw an opportunity in the nascent world of personal computers. He recognized their potential not just for gaming, but for something far greater: trading. While his peers were preoccupied with teenage distractions, Griffin was already dabbling in the stock market. He devoured financial news, studied market trends, and even installed a satellite dish on his roof to access real-time stock quotes. This was the crucible in which a financial prodigy was forged. Harvard University, with its hallowed halls and legacy of academic excellence, was the next stop on Griffin's path. He didn't simply attend Harvard, he conquered it. His mathematical prowess was evident to all, but it was his entrepreneurial spirit that truly set him apart. Griffin's dorm room became his first trading floor. Armed with a computer, a phone line, and an unwavering belief in his abilities, he started trading with a small sum of money borrowed from family and friends. His strategy was audacious convertible bond arbitrage. Success didn't come easy. There were sleepless nights, technical glitches, and the constant pressure of risk. But Griffin persevered, refining his strategies, learning from his mistakes. By the time he graduated in 1989, he had generated impressive returns and caught the eye of the financial world. The seeds of Citadel had been sown. Citadel, under Griffin's leadership, grew at an astonishing pace. The firm's quantitative approach, relying heavily on algorithms and sophisticated computer models, became its hallmark. They were not just traders, they were financial engineers, exploiting market inefficiencies with ruthless efficiency. The year 2008 brought the world to its knees. The financial crisis, triggered by subprime mortgages, sent shockwaves through the global economy. Banks toppled, markets crashed, and even the most seasoned investors faced ruin. Citadel, despite its size and success, was not immune. The firm suffered significant losses, forcing Griffin to make tough decisions. He closed funds, laid off employees, and took drastic measures to stabilize the ship. It was a baptism by fire, a test of leadership that Griffin passed, albeit with scars to show for it. From the ashes of the financial crisis, a new force emerged within Citadel Securities. Focusing on market making, the firm quickly became a dominant player in the execution of trades, particularly in the retail market. Citadel Securities positioned itself as a technological innovator, building lightning-fast trading platforms and leveraging data analytics to an unprecedented degree. They were the middlemen, connecting buyers and sellers, and profiting from the minuscule spreads between bid and ask prices. This dominance, however, came under scrutiny. Critics pointed to the practice of payment for order flow, where Citadel Securities would pay brokers for the right to execute their clients' trades. While legal, the practice raised questions about transparency and whether retail investors were getting the best possible prices. Section 6. The price of order flow, controversy, and scrutiny. Payment for order flow became the lightning rod for a broader debate about fairness and transparency in the financial markets. Detractors argued that PFOF created a conflict of interest, potentially disadvantaging retail investors in favor of Citadel Securities' bottom line. Griffin, however, remained a staunch defender of PFOF. He argued that it allowed Citadel Securities to offer tighter spreads and lower commissions to retail investors, effectively democratizing access to the markets. The debate raged on, attracting the attention of regulators and lawmakers. The Securities and Exchange Commission, or SEC, launched investigations into PFOF, seeking to determine if the practice harmed investors. Griffin found himself in the unfamiliar territory of defending his business practices on Capitol Hill. Section 7. The GameStop Showdown, a Titan Testifies. The year 2021 brought fresh scrutiny to Citadel and its enigmatic leader. The GameStop saga, a David versus Goliath battle between retail investors and hedge funds, captivated the world. As the stock of GameStop, a struggling video game retailer, soared to astronomical heights, fueled by social media frenzy, Citadel found itself in the crosshairs. Conspiracy theories flourished, alleging that Citadel was manipulating the market, a claim Griffin vehemently denied. The GameStop episode culminated in Griffin's high-profile testimony before Congress. Grilled by lawmakers about Citadel's role in the saga and its practice of PFOF, Griffin remained defiant, defending his firm's actions and reiterating his belief in the efficiency of the markets. Section 8. Beyond the Markets, Griffin's Philanthropic Footprint. Beyond the cutthroat world of finance, Ken Griffin has cultivated a parallel identity as a philanthropist of extraordinary scale. His generosity, particularly in the realms of education, arts, and healthcare, is almost as legendary as his trading acumen. Griffin's philanthropic philosophy is rooted in a deep-seated belief in the power of opportunity. He has donated hundreds of millions of dollars to support educational institutions, from his alma mater, Harvard, to underprivileged schools in Chicago. His contributions extend beyond writing checks. Griffin has been a vocal advocate for education reform, urging for greater accountability and innovation in the American education system. His aim, he often states, is to level the playing field and empower future generations to reach their full potential. Section 9. The Griffin Legacy, a study in contrasts. Ken Griffin's story is a study in contrasts. He is a man who embodies the complexities of our time, a brilliant mind who mastered the intricacies of finance, amassing an unimaginable fortune, a ruthless competitor who built an empire on calculated risks and technological prowess. Yet he is also a generous philanthropist, driven by a desire to give back and make a difference in the world. His critics remain unconvinced, viewing his charitable endeavors as a way to soften his image and deflect attention from the controversial aspects of his business practices. Love him or loathe him, one thing is certain: Ken Griffin's legacy will continue to be debated for years to come. He is a product of his time, a symbol of both the immense possibilities and the inherent contradictions of modern capitalism. Only time will tell how history will ultimately judge the alchemist of Wall Street.